Okay, great. Thanks for joining us. And we're going to look at how to backtest an option spread, something that's very unique. And I've never seen this type of thing before. Of course, if you've seen it somewhere, we'd love to hear from you. Add your comments below. And we're going to be doing more of these videos, so be sure to subscribe. And with that said, this is what you do on ThetaTrader. You log into your dashboard here, and you'll see under Trading, under Trade Simulator, you'll click on that, and you'll be faced with this interface. And we can choose any date backwards in time. Let's jump back to 2020. We'll go last year. We'll just pick the beginning of the year. And we'll look at all the trades that ThetaTrader generated. Let's start with January 2 of 2020. And we're going to pull up all of the possibilities from that date. And we'll go kind of backwards in time like a time machine and see how these trades would have worked out. You'll notice there are bullish scenarios, bearish trades, of course, and non-directional or neutral. So really we can look at anything we want. Perhaps we'll find out here if you were bullish and you had placed January into month on that day. And you'll notice here you get a summary of the trade, tells you the premium paid and so on and so forth in this case. And this is really the fun part here. You can sort of play it and watch it proceed day by day. You'll see the colors changing here. This is our risk thermal indicator. And you can automate this as well so that if it gives you a signal to take profits or take your lumps and move on, you can automate that with ThetaTrader. But you'll see here these different colors mean elevated risk. You'll see the P&L of the trade going from red to green. In this particular example, it's working out well here so far. And then by the end of it, if you hadn't taken any profits along the way, of course, it would just end up expiring. So there's an example of just backtesting one particular strategy. We can look at a dragonfly as well. We'll go backwards in time. Let's assume you had placed this trade on January 2. This was the dragonfly here for the E-mini S&P 500 March. So that's your quarterly expiration. You can see here that by the end of this trade, it did end up for a loss. However, let's just find out what really happened day by day. Okay, and so far so good. You can see all is well, everything is green. And then it turns blue, and actually that's a profit-taking signal. So really, if you had followed the ThetaTrader RTI and automated your exit strategy, you could have exited this position here instead of holding on. And in fact, we always suggest getting out before expiration. So there's another example of how to go backwards in time. And maybe you're looking at an iron condor, and you don't always have to sell an iron condor as well. For example, we'll go ahead and pick one here. How about the February end of month iron condor that we would have bought? And instead of going step by step and watching it like this, you can just go right to the end if you want to get right to the good stuff. So you can see this one here was profitable for a while in the green. But of course, with all that theta decay working against you, eventually when you buy options, that's sort of a lower probability outcome. And that's why we like to focus on selling option premium. So there's a good example of how to backtest. You could compare the dragonflies versus condors. You could jump into the Nasdaq or the Russell. Of course, you could look at just bearish strategies or bullish. And that's all surrounding theta trades from this date here, January 2 of 2020. So you can play them out and see how they would have done. So you can spend a lot of time having fun with this. And of course, it's a very valuable tool as well. All right, with that said, we're going to end this short little tutorial, and we'll put something together here shortly with another approach to trading option spreads. We'll do another video on ThetaTrader soon enough. All right, thanks. Bye-bye.